I want to give you a very serious warning about the bond market and the stock market. But the truth is, I could play it down and this is bad news. It is. A lot of people are going to lose money. A lot of people have no idea how bad things are in the market. I'm going to break it down for you. But to be honest with you, I'm really super stoked. I know it's weird. So let's just start this video out just right. Economic freaking Ninja has got a warning for you, and we're going to talk right now about the bond market. And let me ask you this, if you just want to make money in up times and down times, type 1 for me. Now, let's do this. See this right now? This is CNBC. This is all the different types of bonds. Probably can't see it. It's probably backwards. I can't figure out how to turn my thing around. Right here, this is the U.S. 10-year bond. It is up 0.026. It is at 4.45%. Now, on a day where Iran and Israel are firing missiles at each other, oil refineries are on fire, things are going to crap in a handbasket, that's a bad sign. You see, normally when bad things are happening, guess what happens? Bond yields go down. Man, it's hot in here. You just got to open this up. So normally bond yields go down because a lot of people are freaked out, but people aren't so scared today. That's actually not a good thing. It's so bad. Okay, real quick. Last day for the AI Stock Trader Pro, and everyone keeps asking me, is it the same course as what we taught for crypto? No, because stocks are totally different than crypto. So totally different course. Last day for that discount down below. All right. So real quick, guys, which bond does mortgage rates follow? Which one? 5-year, 1 year, 3-year, or 10? Just type the one down below. And I want you to understand the greatest wealth effect in our nation, and actually in the world, is the housing wealth effect. When you feel like you have bought something, an asset, most of the time it's the greatest asset most people have is their home, right? There's nothing wrong with that. I think everyone should own a home, actually, to be honest with you. But only certain people are smart enough to keep the home. The housing wealth effect, when you feel that your house is worth a lot, it is very important because it affects how you spend money. You know, will you go out and buy new tools? Oh, I just got a new tool too. I just got the Milwaukee 18 gauge nailer. I don't know if you dudes are into tools. Sometimes I can act like a tool, but I am super pumped on that. I love Milwaukee stuff. So will you go out and buy a bunch of new tools when you feel the economy's up, or do you think it's going down and you want to regress your spending, right? Well, with housing, if you feel like your house is worth something and it's going up in value, you're more than likely to spend money, okay? So the answer to the question is it's a 10-year bond. And so 10-year bond, banks go, hey, we want to loan rate money out pretty much based off the 10-year, because by and large, people keep their home between 7 and 10 years, or they keep their mortgage around 7 and 10 years. And so that's a good judge of locking in a rate, knowing that we can hedge against, people refinancing and things and interest rate fluctuations, okay? So today, on a day where stocks should be dropping, all right, there's not good economic data coming out. And anything that you think is good, like the jobs report, you're going to find out in probably a year that was all lied to you, but you were just lied to. The government lies. I don't know. Do you guys agree? Type yes or no. Do you agree the government lies? I would be typing yes. Si, senor. So here's the story of the day, and this is where you have a stock market warning along with the bonds. U.S. Treasury yields are little changed as the Israel and Iran conflict continues. It says U.S. Treasury yields were relatively unchanged Monday as global markets continue to react to deadly airstrikes being exchanged. No, they're not reacting, okay? If they were reacting to these deadly airstrikes, people would be diving from stocks into bonds, and they would be diving rates down, okay? But because we have large countries like China, they're out there selling our bonds. Japan is preparing to sell more of our bonds. It's keeping yields elevated. This is bad. This is putting the screw, just tightening it down, to the American economy, all right? It says here the 2-year Treasury yield rose less than 1 basis point to 3.96. The yield on the benchmark 10-year was less than 1 basis point higher at 4.43. So the entire bond market across the board from 10 to 30 or 1 to 30 are up. Okay, that's not good. It shows here that oh sorry, the 3-month was dipped down a little bit. So it says here the move follows treasury yields climbing sharply on Friday after Israel launched strikes on Iran. Again, that's not good. Yields should be going down because people are going to safety and buying bonds. So you see, Warren Buffett did it perfectly, slowly, without the market knowing. I mean, Ninja told all of you guys, type 10 if you heard the warnings from Ninja, like, hey, Warren Buffett is selling his stocks and he's moving into treasuries, but he was doing it at such a slow rate. He was probably buying directly from the U.S. Treasury at the same time, so they didn't have to. Now think about this. Oh man, I'm going to show you guys something really cool. He was doing it so low that it didn't affect the price of treasuries, right? But one way that Warren Buffett does understand how to not affect the price and how the government is super happy he does this is he can go straight to the U.S. government and say, hey, look, you know what? Instead of having a bond auction, a treasury auction, why don't I just buy everything you need right now to raise money for this month's, like Biden's diaper fund. You know what I'm saying? So what happens is the Treasury doesn't have to announce the need for printing so much new money, right? Because Warren Buffett is buying it directly from them. There's no auction for the news media to talk about, and the Ninja's definitely gonna talk about it. And what it does is it keeps that value relatively flat. This is important to note, okay? Wealthy people have already exited the stock market. All right, you're already past that. And a lot of people go, why didn't it crash yet? Okay, you got to think bigger than this. So that's not how markets work. They wait until the common man and woman figure it out and run for the exits, because retail is the most emotional part of a market. That's why you haven't seen me talking about crypto right now. It's because retail has exited. All right, my DeFi group knows this. My real estate group knows this. Everybody, you should know it. Retail is emotional. I mean, just watch Jerry Springer. You'll see. Now it says here tensions have slowed a little. Tensions showed little sign of abating over the weekend into Monday as casualties mounted on both sides of this war, and scheduled talks on Iran's nuclear program was canceled, right? Well, blah, 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 blah. Today, crude oil prices were volatile no, they weren't volatile. They went down after Israeli unmanned aerial vehicles, and they're just giving you all these bullet points, right? Point being is that oil has come down. The stock market has rallied a little bit. They're probably haven't gained from their losses of the other day when the strike started. But my point being is that this is not how a rational market reacts. But remember, markets get very irrational when fear sets in. So Warren Buffett, and I hope people understand this, Warren Buffett exhibited fear. Anyone wants to clip this right now, because people need to understand this. No one will tell you this online. Warren Buffett exhibited fear when he started selling Berkshire Hathaway's assets and converting them to treasuries. Why? Many people go, no way. No one like Buffett has fear. Yes, he does, because he has fear that if he keeps that money in the stock market, even though he started selling a couple of years ago, right, to not panic the market, and the market's higher than when he started selling, he doesn't care, because the fear is that if he waits too long, he'd rather be 6 months too early than 1 day too late. And I know, because of what I do in the crypto markets, that when you own, let's say 1% or 2% of an entire network, right, of all the tokens of a network, and you try and sell, yeah, good luck. You're going to tank the price because there's not enough buyers to meet the demand of your sales. Okay, so that is where I've sort of pigeonholed myself, because when I talk about stuff, I can't sell into me talking about it, and I own so much, so it's not even worth it now. So now I'm just buying up companies. That's my goal, is just buy businesses. During this downturn where private equity is draining up, and hedge funds are closing their doors, you're going to get private equity. We've already seen that in the news, right? Or there's not the private equity funds that there used to be 5 years ago. Hedge funds are closing doors. They cannot compete right now with the inflation narrative and the yields that they have to try and get after cost. They just can't compete. So a lot of them are giving back money and closing their doors. This is a real event that's happening right now, and I want you to understand. Now, just for my mental clarity to see everything I said right now. Type 10 if it made sense, type 11 if it didn't make sense to you. The reason why I ask that is because I want to see and get live feedback from you, so that I want to teach everyday people, got a couple 10s. I want to teach everyday people that don't understand economics or how these things flow or cycles, something completely new to where you can absolutely go crush it. This helps me, so, okay, cool. A couple people it doesn't make sense to. All right. If it doesn't make sense to you, stick with me over the next couple months, because you're going to see some fireworks, and then you'll go, okay, I remember him saying this or that. So, all right, I'm gonna let you guys go. Last day for the pre-filming sale, and then the price goes up on the AI stock trader course, and hopefully you guys have a great day. The Economic Ninja. Ew! Sorry. Oh, wait, real quick. So, hey, I'm going to prove, remember, I told you years ago, there's going to be some truths about the Ninja that come out. And then I told you I was waiting to buy my supercar collection until prices are falling, and they are. So I just acquired a storage property, start storing all the cars. I'm getting excited. And then more things are going to come out about me. And then you'll be like, oh, the whole time this guy was just trying to teach us from his truck. That was my plan. I wanted to do things different than everybody. And so I'm excited. I can't wait to show you. I still want to drive around these cars with a tricycle, though. I got to be honest with you. I'm not a very fancy person, but I am going to buy up those supercars because they're falling in price so fast. I'm going to start storing them and save them in a collection. I'm going to show you guys how I'm going to do it, too. It's really cool. I'll be able to pay myself to curate the cars and write that off. Thank you, IRS. It's a thing. It's a thing. And then I'll sell them and make a lot of money. But I like showing people how to buy and sell those kind of things. All right, with that being said, the Economic Ninja is out. Do your best guess to guess what the first car I'm going to buy is. I already know which one it is. I'll see you guys later.